How is it going, guys? I hope everybody is doing good tonight. Choppy, trappy day, but gave us a couple of great trades there, right off of the plan. So that's always nice to start off a session like that, especially on a choppy Tuesday here, as we were, most of the market was pretty much waiting for Microsoft to go into earnings after hours, and that was quite the move there. We'll get a little bit into that here just shortly. I'll try to make this short and sweet because of the hour, so I do understand, and I apologize for technical issues over this weekend, but we'll make sure we get all these videos out this week nice and solid, and we'll make sure we get you guys what you need to know and where you need to go. So let me get through the top here, and then we'll take a nice look at this chart here. So equity markets are showing signs of caution, if not topping, in the face of a declining outlook for Q4 2022 and 2023 earnings for the S&P 500. The dogfight that we saw play out today had the markets up from the open but moving sideways most of the regular trading hour session from Monday's action, with resistance just above our key targets alerted at the 40.31 gravity point and ultimately the 40.45 target level. The overall caution remains due to a raft of economic data that is due out Wednesday through Friday that culminates with the PCE price index on Friday that we continue to warn about over the past week. The index is expected to accelerate on a sequential basis, but to decelerate versus last year, which is mixed signals indeed. A slowdown in year-over-year inflation is good, but it doesn't mean much with inflation still running at more than double the Fed's 2% target and accelerating in the near term. Obviously, we're also seeing some caution due to these uncertain earnings posts, and we can see that with just what posted today. Went through them after hours, and they were quite all over the board. News that didn't get much attention on Monday is the index of leading indicators. The index of leading indicators fell by negative 1% and about 0.3% faster than expected move. This is just shy of the worst reading in the last few years, which just so happened to be last month, and points to an increasingly weak conditions within the U.S. economy and many other global leaders in tow directly behind. All right. Well, so not much that we didn't talk about there pretty much after hours anyway, with the closing comments there as Microsoft was posting some earnings here. So let's take a look at the chart here, fellas. We are on the 4 hour here. We're going to go through this real quick, and then we'll get into the nuances here. So we have our triangle resistance that we're watching, resistance here in the yellow, and then support here on the bottom here. We're just going to keep this must hold on the chart just so that everyone is more than aware, so we don't ever have any confusion about what we're talking about here, and that's why they're color coded. Now, one thing I do want to point out before we get into this, we have been following our price projection very, very cleanly so far. So if I go ahead and click on it here, you can see we've been following the bullish price path quite well. Now, we did dip a little bit lower on our triangle resistance than we now holding a support, correct? A little bit more than we thought, but so you can see here that the bearish move would have actually taken us down to retest this trend line down in here, but so far so good. So as long as they can hold above this triangle resistance, we should see a bounce back up here. And then when we get further into next week, which this will put us around end of next week, this is where we want to watch for the reaction that this could fail. Now, this has many chances to fail before this. We're just saying that it is nice that it's somewhat clean here. I'm going to go ahead and pull this off for the time being. So while we're talking about this, we can see a little bit better here what we've got going on real quick. Let me get these off of there just so they're not in the way. All right, and let's go ahead and zoom in on an intraday basis so we can see a little bit more of the move we had here this week and today. So from last night and this morning's pre-market plans, our alert was basically that the markets would remain supported above that massively important 4K level into the 40-15, 20-ish area today in the cash session, which is putting us right back in this same zone here. And you can see that we are being trapped along this this trend line here. This is going to be key that they get back above this. This reaction is everything right now. Here was a failed breakdown that gave us our trade, and now we're looking at this, that they need to get this back overnight pre-market. And with those earnings in the morning, they definitely have the chance to do so. So that play did play out nicely as the market tried to take out 4K here, but gave us a fantastic failed downside look as it came down. Look down here, didn't want any of it, took back off up to the top there. So it gave us that fantastic failed downside look before it rallied back up and then tagged and slightly overshot our alerted RTH target of 40.45. So you can see it went right up to this trend line. So it's no surprise why it stopped here. Again, this is why these are on here. We took profits in real time, alerted it right there at the close of the day, and we nailed our 40.45 target, and we were out and done for the day. Now, we said in real time that you could short this back down if you wanted to. We said that it wasn't a great place to be running after hours, but we did want to take a little stab at that, and we are still holding a small runner short off of this reversal back down from that key resistance area that we had identified last night and this morning pre-market. Going to take some profits here as long as we stay under here. I'll hold on to the runner. If we break this, I'll start to look to get out of there. Yesterday, ES put in an extremely key technical session as bulls were able to clear the 200-day simple moving average. That was a massive area of confluence, being the resistance of our core downtrend line extending from January 2022, which this also happens to be the same thing. That's where that triangle is actually coming from. It's that same resistance, same support, same core downtrend. So that confluence is massive. This is why all of this is happening, guys. It's that important, and it really is. Confluence is everything in this market. So that resistance of that core downtrend line extending from January 2022, though, where this is now, that's actually posting now the 5th attempt to clear the 200-day moving average since basically, in quotes, the bear market has started. Now, while the 39.95 4K bearish triggers did not come into the session today, markets did remain subdued below our key 40.45 nearly all day long. You can see that here. We did get that nice push up, but stayed, it was a nice, slow little move up there. Got some liquidity breaks that we saw as we pushed into, the afternoon here, and then we got the crazy earnings move, but it still did push up there. But it was the majority of the cash session. That's what is important to take note here, is that we did remain somewhat subdued below that 40.45 nearly all day long. Big picture view remains unchanged on the larger structure in play here now. Keeping it simple, though, it was the pop above 39.95 that started yesterday's melt up. And pushed all into this, obviously, and then we trended back down, but that's okay. But yeah, that pop above 39.95 started yesterday's melt up. The 200-day simple moving average is currently around the 4,006 handle as we're going right now, and the core downtrend line from the January 22 is around the 40.20 zone. This is the cluster that bulls will need to hold above. As long as we're above 39.95 lowest, the breakout remains in play with that 40.45 test number 2, and then 40.60, and then 40.80 plus targets. 39.95 fails, and that's where the sale side will start from there. There was a glimmer of hope post-cash with Microsoft. Let's go ahead and bring that up real quick and just take a look at this, if it wants to give it to me. I forgot. I thought for a second it was going to say no. Go ahead and take a look at this real quick. I like to call this the bearish boot formation there on pattern. But there was a glimmer of hope post-cash here with Microsoft earnings boost to take out that resistance, but no such luck, as after a brief excitement here, all the gains were given back from this boot formation. So you can see we went straight into exactly where we were talking about. We were talking about this into the end of the day, and that's right where we were looking at. So it came back down there. During the cash session, though, today we had looked at Microsoft, and we were expecting some bearish action just per the technical setup that we did identify on all major time frames near term, most likely to affect the underlying post earnings. Microsoft did rally quite a bit from that alerted key level after their post, but since then, obviously, it's subdued again below this critical 240 level. So I would definitely be watching this level. And it looks like they're trying to pop back above it right there as they went into close. So watch that 240 pre-market on Microsoft. That's going to be critical. A sharp drop from around that 252 when we reiterated the bearishness on this pick. The entirety, though, of that 245 to 250 area of interest here is instrumental in the price action of Microsoft. Unless we begin seeing a few closes here above it, with aggressive buyers with size stepping up, will very easily could begin the fall back below the 230 handle, which we would start to see a much further decline of around where we measured it out, and it's about a 5 to 7% decline quite quickly in this current landscape, obviously. So watch for that. So in the morning, the levels you're going to watch is the 240 to move back up to the upside. And if it can't, and they don't start to see some closes on the next few days, this could be a good swing trade post earnings next week even. That if it does fall back below that 230 handle, you're going to want to look short here and short this bad boy all the way back down here. Let's jump out to a 2 hour so we can kind of see what we're looking at here a little bit better. So there you go. So that 230 handle's right in here, and you can see why, right? It's exactly right there. So this breaks, we're going to start to target, about a 5 to 7% fall, which takes us down about 212, 210 right in there. So that's one thing we're definitely going to be looking at on Microsoft. Now, a couple things that we did want to talk about here real quick. Whoa, what just happened? That was crazy. So the dollar weakness story, as mentioned last night, still very important story. And now we have had some key FX news perspective with the Canadian rates print tomorrow, as well as the hotter than expected Australian inflation numbers that hit the terminal out earlier this evening. But we will touch more on this tomorrow and into Thursday, Friday, where and when it will be more important on our immediate term macro radar, but not right now. We will get into this. I just wanted to bring this up because I did talk about this last night, and it's not out of the picture. Obviously, it just hasn't done too much yet, but it's absolutely more than still on the agenda, and we will be talking about it a lot because next week we're going to be looking at quite a bit of things that will all be key around the dollar, and then the FOMC meeting that comes on February 1st. Today could be viewed, though, as perhaps one of the few signs of any cracks appearing in the recent counter-trend rally. But with this said, our key area to watch overnight and for tomorrow will be this same 39.95 to 40.20 chop box range. We're treading in very, very much so treading in the muck right now currently. So we'll repeat this in the morning, but scenario one right now would remain that if we remain bid above the 4K, we have a high probability to see an attempt made back to that 40.45 test again to break out, targeting directly the 40.60, then the key 40.80, where the break of that level would clearly target the 4100 very rapidly. Scenario two being that bears will want an IB close below that 4K 39.95, which will confirm the counter trend rally crack observation I just made. And we would target that 39.50 to the 39.31 gravity point, and then also likely further below there just yet. As of right now, we are trading around this 40.15. We're at 40.19.5. Nasdaq's trading about 11.835. Let's see here. The dollar's at 101.828. VIX futures 20.3. Silver down just slightly. Gold down slightly, about 0.1. Bitcoin futures are down about 1.4. Bonds are actually holding up pretty well overnight so far, and oil is up just about 0.34 there, but trading right around in this 40.15-ish, 40.20-ish range that we've pointed at so many occasions, including very many today. If bears do not get a few closes here below this 4K 39.95, this may very well shape up to be the bigger picture failed breakdown situation that will make a run towards the 40.60, 40.80, 4100 vicinity. We are currently in poor follow-through chop mode, so this action generally looks like a bull flag, but 40.20, 40.45 is a very balanced, liquidity-heavy chop zone, and therefore we must tread very carefully at all times while trading remains inside this range. We will take a further look at the European and Asia moves here. So far, Asia has been, obviously it's Lunar New Year celebrations, but the Nike is rising a little bit here after hours. Going to go ahead and wait for the Europe numbers to come on here shortly. We did see the U.S. oil inventories report came up. They were up by 3.38. And then a little bit of news, obviously, throughout Latin America because of the international funding they're looking for. And then there was some news from the Japanese Prime Minister talking about some new economic trends going on there. We'll talk more about that here in a little bit that I'll post on the globals. I will post this full chart here with the brief summary of what I just went over. But that's really about it, guys. I will see you guys on pre-market, and we will go from there. Other than that, have a great night. Get some sleep. Get up on pre-market with us so we can get a plan and make you guys some money. Other than that, have a good night, guys, and cheers, boys.